And it's another trading week right here in Lagos, Nigeria. We're going to be tracking what's playing out in the global space. And right here, here's what's coming up. Billionaire businessman Femi Otedola is calling the Dangote Refinery a historic leap for Nigeria's energy future, praising deregulation as the end of entrenched interests. And gold hits a fresh record high as markets increasingly bet on more rate cuts ahead. Plus, over $1.7 billion in crypto positions have been liquidated, with long bets on Bitcoin and Ethereum bearing the brunt. Yeah, that's the picture of most of the markets that we track, and we see with oil. It's down again, just like this morning. $66.22 a barrel. That's for Brent, 0.69% down. WTI crude, $62.37 a barrel. A lower 0.49% drop there for all markets, and definitely investors watching out what's playing out with the geopolitical issues right there with Russia and Ukraine, and that's driving sentiment. So it's still the range trade that we've seen so far in the past couple of weeks. But this morning it did start off in the green, but now we're seeing the pullback already in the afternoon trade. Let's get a check on the gold market now. New highs right there. It's green on the screen, and obviously we know uncertainty that drives gold prices. Spot gold 1.1 breaking through that $3,700 level by $23. US gold futures a bigger 1.4% advance, $3,758 per ounce. And we see spot silver, that one's been climbing also. Now, I guess $50 is the next position we're looking for now at $44 per ounce. That spot silver up a bigger 2.49%, platinum 0.94%, up $1,429. And palladium, that's the biggest mover, $1,204, up 2.98%. That's sentiment right there in the metals market. All right, from story earlier on Business Morning, billionaire businessman Femi Otedola has hailed the Dangote Refinery as a historic leap for Nigeria's energy independence and economic future, while commending President Bola Ahmed Tinubu for having the political will to fully deregulate the downstream petroleum sector. In a strongly worded statement, Mr. Otedola said the deregulation has broken the grip of entrenched interests and ushered in an era of transparency, competition, and accountability. He warned that some operators, particularly depot owners under DAPMAN, are clinging to an outdated fuel import model that is fast becoming irrelevant in the face of local refining capacity. The game has changed, Otedola declared, adding that with over 4 million metric tons of storage capacity lying idle and Dangote's 8,000 eco-friendly trucks transforming fuel distribution, depot owners must adapt, restructure, or risk bankruptcy. According to him, Aliko Dangote's refinery is not the problem, but the solution to decades of inefficiency, subsidy fraud, and rent-seeking in Nigeria's downstream oil sector. All right, let's get a check on East Africa now. Kenya's domestic debt, that surged 728 billion Kenyan shillings over the first 9 months of 2025, jumping from 5.87 trillion Kenyan shillings in December to 6.60 trillion Kenyan shillings as of mid-September. The spike comes amid ramp up in treasury bills and bond auctions, with short-term bills now making up a growing share of the debt stock as the government leans on local borrowing to plug widening fiscal gaps. And Nigeria is stepping up its game in livestock exports as the government seeks to diversify the economy beyond oil. Under the newly launched National Livestock Growth Acceleration Strategy, NLGS, the Ministry of Livestock Development plans to rehabilitate over 400 grazing reserves and upgrade infrastructure like veterinary services, genetics, and feed development. With export potential estimated at 150 billion naira annually, Nigeria is eyeing markets in the Middle East, aiming for value-added production and reduce dependence on imports. Efforts are being supported by international partners such as FAO, OECD, and regional cooperation. It has also been strengthened under ECOWAS initiatives to boost trade in red meat and animal source foods. And now to our first conversation. Across Africa, businesses are rethinking their models, not just to survive tough macroeconomic realities, but to thrive in a future shaped by sustainability, climate change, and shifting consumer expectations. In Nigeria especially, where entrepreneurs face high costs, currency pressures, and regulatory uncertainty, sustainability is no longer just about going green. It's about resilience, innovation, and long-term competitiveness. Well, join us to unpack this now. We have Stephen Ineke Matthews, a chartered management consultant. He's going to be joining me right here in the studio. It's good to have you on the show. Welcome.
Thank you so much, sir.
Fantastic. So, definitely entrepreneurs, businesses, going through a lot, right now, but we've had currency stability for a while now. The issues that used to plague us are looking quite stable, right now, if you're looking at the currency front and also cost of, some
inflation,
of the inputs and inflation and all of that. So talk to me about the global push towards sustainability. How's that influencing, business strategies in a country like Nigeria, in your opinion?
Good afternoon, everyone. Good afternoon. Thank you. It's nice to be here.
Fantastic.
The issue of business sustainability, it's a global topic, right? You hear issues of EVs coming up every day in America, in China, people talking about moving from fossil fuel to, electric vehicles, to other sorts of power supplies and all that. So if you want to gauge how sustainability influences what we do in Nigeria, the business current trend, Nigerians must move their businesses from dependence on government to finding solutions to help businesses to become more sustainable in the long run. So issues like, for example, you say instead of depending on the telecoms power supplies, instead of depending on the electric power supply companies or businesses can now start focusing on how to generate their own independent power supplies. Solar plants, renewable energy systems, solar panels and all that can come in. That will help companies to also save cost, which will boost productivity. Once productivity is boosted, employment becomes feasible. It means you have more money now to employ more manpower to also eventually boost productivity. But companies are struggling to stay in business because you spend a lot of money providing power. That money spent on power could have been channeled into providing more employment, which will also boost productivity, which will also boost the GDP of the country, which will eventually reduce the word inflation. So all of it works together if we begin to start strategizing and focusing on how...
So I guess there's a delicate balance there.
Yes.
As a company, your margins are strained. You're also trying to provide
quality service
Good. And sustainable ways of doing business, which costs a lot of money.
Absolutely.
How do you balance that realistically?
Realistically, in most companies these days say that you have to depend on loans, for example, to thrive. But I say that I don't believe in depending on loans to run small businesses. Rather, I believe more in building independent capacities to be able to keep the business running. And one of the ways to do that, I keep saying every time, is energy consumption. Managing the cost of running a business. 70% of the cost of running every business is spent on power. This facility now must run on quality, affordable power supply. If not, it will affect this production.
Right.
So for a small business who may not have all that financial bandwidth to be able to run and compete with the bigger ones, how to be able to manage your resources is consider alternate power supply, which gives you access to more funds that you can put that fund into other aspects of production. Once you are able to produce more, you are also able to sell more. If you sell more, you earn more. You earn more, you are able to scale up the business. The scaling of the business also leads toward eventual profitability.
Because I guess, some businesses might be struggling on how to, tag sustainability. Is it a cost burden or a growth opportunity?
Both ways. It's a cost burden. There's something we call a management system that we call the cost of quality. There's something called the cost of quality. in quality, you have two types of cost. You have the preventive cost, and you have the continuous improvement cost. Preventive costs are the costs that you incur to prevent a problem from happening, such as training, maintenance, improving your production capacity, buying new equipment, and all of that. Now, when you fail to put cost in place to prevent damages from happening, you eventually have to spend money in correcting damages when it has happened. So the more you spend on preventive cost, the lesser you will have to spend on corrective cost. The lesser you spend on preventive cost, the more your corrective cost goes up. So it's both ways, both preventive cost and also continuous improvement cost.
Right, and definitely we have some businesses that are trying to, do business in a sustainable way. Do you think they're being rewarded here in Nigeria, those kind of businesses? Of
course. Businesses, I tell you something, my friend. If you travel along the Lagos-Ibadan Expressway, just for some time, just pay attention to it. You observe that several factories and plants are coming up every day along the Lagos-Ibadan Expressway axis. People will not come into Nigeria to do business at that scale if there isn't something here. If they are not going to make profit, they won't come. If the economy, in quote, is not favorable for businesses to thrive, they won't come. The challenge often is that most small business people want to do big things without first doing the small things. So before doing the big things, consider how to minimize wastages. A lot of small businesses spend so much money on telephone rates. A lot of small businesses spend so much money on personal consumption, personal utilities. A lot of small businesses spend so much money on maintenance costs. However, they don't have funds to do big things, but they want to do big things. So in order to prevent you from losing out on the bigger picture, reduce your smaller cost. Reduce telephone rates. Reduce cost of transportation, reduce cost of power. Switch to alternate power supply so you can ration the power consumption. Do like an energy consumption audit every month or every quarter that gives you an idea of how much money we are spending on power. You can divide that cost into two halves. One part you save, the other part keeps the business running.
All right, so definitely you did mention most of the time you have to reduce your reliance on government.
Yes.
As a business.
I'm a huge preacher of that, yes.
But most of the time some would say we need some government input in all of this. What do you think is the sustainable way for government to actually help out, when it comes to energy costs right now? We know most of the companies there it's deregulated, at this point, but I guess there's some policies that could help just lessen that burden.
Okay, first things first, you need to look at it from what is the government role in providing favorable environment for businesses to thrive. Government is not responsible and cannot be responsible for running the day-to-day affairs of every business. What government can do is provide an enabling environment. One, by policy changes, providing sustainable policies over a long period of time. One of the challenges we have in government today is that government policies tend to change just like the way airtime rates or telecom services rate changes every day. That would affect businesses. No business can thrive if the government does not create sustainable long-term policies, right? So if government is able to provide an enabling environment for businesses by providing small businesses with more access to what you call independent funding for their businesses. That way, you also help them reduce taxation. Small businesses spend a lot of money on multiple taxations, and that way businesses cannot thrive. If you don't have what you call a centralized way taxation policy for small businesses, where for every income or every sale, every product sold, this is the expected exact amount of money that is to pay on tax. You cannot survive it in this country. And that's where government comes in to help us say, for every small business, you only have to pay maybe a 5.3% or a 4-point-something% tax on all your production costs. That way that you cannot be paying the same amount of money in taxes like the Dangotes are paying. Small businesses should not be paying VAT or withholding tax of like 15 point something percent compared to what the big guys are paying. So government need to focus a lot more on distinguishing between small businesses and the big businesses, and also give room for self-employed people to also thrive, because it is the SMEs that drives the economy of this country. That's the truth. The small businesses, which makes up the SMEs, that's the powerhouse of the economy. This morning I was reading quickly on the GDP rate of the country as of this morning. I saw that it was about 466 trillion US dollar, the total GDP of the economy. Now, I also did an analysis to say, okay, what is the number of businesses or the category of businesses that helps to push that volume? We found out that SMEs makes up about 70% of the powerhouse that moves the Nigerian economy. So government needs to focus a lot more on paying attention to these SMEs by providing tax reduction. I'm not saying tax waivers, but I'm saying tax reduction, with emphasis on helping them to be able to have more access to resources. That way they can expand their production. Economies will only thrive when production is more. And it is the SMEs that has that powerhouse to provide more production that meets the demand of the populace. That way, businesses can also thrive.
We have a new, tax regime.
No, let's not even go to that. Let's not even go there.
That's coming up.
Until January, we will know exactly what the total framework is, and everybody will be able to find their bearing as to where each person belongs. But I keep saying it, that small businesses should not be taxed the same way big businesses are taxed.
Right.
It's not fair.
I guess that's one debate that will remain with us for the longest time.
For these kinds of meetings, like we were putting something together to help people understand how to build sustainable businesses. So we're organizing the Paradigm Shift Conference, for example, where we gather together, a group of people to also focus on this SMEs movement, to talk to young people on how they can build sustainable businesses, how they can build sustainable wealth through the vehicle of business, because that's where it works. The idea must be planted. That's the seed. The vehicle through which that seed can germinate is through business. So, and for you to be able to succeed in business, you need to have what we call sustainable strategies. That's why we are doing the Paradigm Shift Conference, to teach young people on how this can be done and how you can.
Because we're churning out a lot of young people into the labor force.
Yes.
Thousands and
in fact, our mission is to stop young people from depending on the labor market, to start becoming self-sufficient and self-reliant by creating jobs for themselves, also creating jobs for other people. The more jobs we create, the less dependence will be on the government. Because as it is now, 90% of us in this country depend on the government. Government's movement determines our own direction. That's because there is what we call unemployability problem in Nigeria. We don't have an employment problem. The Bureau of Statistics says we have we call it about 4.3% inflation, dropping now. That is only happening because now many young people are now finding something to do. That's why it's dropping. It's not because, in quote, the government is doing something that is so brilliant.
It's been described the hustle economy.
Yeah. So young people are now finding ways to engage in productive activities. By so doing, the GDP will also go up. Inflation must come down. One will give in. So we are trying to teach young people on how, you can create your own jobs. You can employ other people. You don't need to go to school, come out of school, and depend on the government for jobs.
All right, so much to unpack there.
Absolutely.
Definitely, but we need to shape the minds of the young people we're churning out of school right now. Stephen Enike Matthew, Dr. Stephen Enike Matthew is a chartered management consultant. Thank you so much for sharing your perspective with us today.
Thank you. Thank you.
All right, let's get a check on what's going on with most of the markets. Now, we see it's mostly green. That's we're looking on the African continent there. We're seeing the NGX there, not convincing enough, but it's 8 basis points to the good. The Johannesburg Stock Exchange, 0.27%. South Africa's equity market opened the week on a positive note with the FTSE JSE All-Share Index there, came up 0.27% for today's trading session. The benchmark index, that touched a fresh 52-week high of 106,968 points, extending gains on the back of strong performances in heavyweight stocks and resilient investor sentiment. Other markets we track there now, we see In North Africa, we see that's in the red, 35,000, holding on by a hair's breadth there. The Nairobi Stock Exchange closed in the red again, 0.87%. That's last Friday. Markets in the UAE, we're seeing mixed sentiment in the UAE. Dubai's index, that was largely flat and upside. There's largely flat for both of them. With utilities and ADNOC affiliated names, that offset softness in the banking sector. The Abu Dhabi has seen slight gains helped by strong corporate deals and gains in energy and industrials that we're seeing there. Then for other Gulf stocks, they opened with modest movement today, but we see it's a switch there. The Qatari exchange, 0.40%, down 11,222 points. So we're seeing mixed sentiment for this Monday trading session. Let's get checked now on the U.S. stock futures. We see they're kicking off red. The investors are still trying to figure out what's going to play out even after the rate cut last week, and forward guidance on what the U.S. Fed is going to do with interest rates going forward. So we're seeing a direction there for the U.S. futures market. Let's get a check now on what's playing out in Europe. We have Lars Holter joining us now with the details on what to expect. Great to have you, Lars. How's the market starting off in Europe? Are we looking red or green?
Yes, we're slightly in the red again, Ladi. Good to be with you again. But you know what? It's a weird story. There has been a little bit of a rebalancing of the DAX today in Frankfurt. Now, two new companies are in. One is the engineering conglomerate, the GIA Group. The other one is Scout24, which is a tech company. Both not necessarily household names. They're replacing pharmaceutical firm Sartorius, another name you might have never heard of. And then one of the biggest names in German business is actually dropping out of the DAX. Porsche is a big name, but it's a rather small company and no longer seen as representative of Germany's economy. So dropping out of the DAX, Porsche is down around 7% today. And for whatever reason, it's dragging other auto shares with it. And that is part of why the DAX in Frankfurt is actually down today.
Wow, quite impressive, incredible move there for who's coming out of DAX and coming in at this point. But there's news from Brussels that the EU has prepared another package of sanctions against Russia, another effort to put pressure on Moscow to end its war in Ukraine. What can you tell us about the latest sanction package?
Yeah, Ladi, it's yet another initiative. This is indeed the 19th sanctions package that the EU has now prepared, and you have to wonder if any of those have done much of anything. They have likely worsened the economic situation in Russia, but they haven't done too much in terms of moving Moscow, moving Putin any closer towards ending his war in Ukraine. Anyway, there are two reasons now why this 19th initiative was put together. First of all, just over a week ago, Russian fighter drones got into Polish and Romanian airspace. And then we've also seen another breach over Estonia this weekend. Of course, Western alliances now had to respond to a violation of EU and NATO airspace. Also, US President Trump has implored the EU to join his country in levying higher tariffs against China and India, specifically to punish them for buying Russian gas. And while it's unlikely that anyone in Brussels wants to play the tariff game that Trump has started, they do understand the pressure here. Trump said quite clearly that he insists on some action by the EU. Otherwise, he won't show any support in the ongoing struggle with Moscow. And the EU, as well as everyone in NATO, of course, knows that US participation is absolutely necessary if they're seriously hoping to eventually end this long and deadly conflict.
Yeah, and what exactly are the sanctions in this new initiative?
Yeah, maybe the most important one is an earlier date for a total embargo on Russian gas. Now, it might be news to many, but some EU countries are still, to this day, receiving gas from Moscow, mostly due to old contracts. Those countries are in the southeastern part of Europe, and among them is Slovakia, for example, or Hungary, where President Orban has just last year even signed new delivery deals with Moscow. Now, the EU is saying that a full embargo on Russian gas gas currently planned for 2028 could actually come much earlier, 2027. Of course, that still sounds like a long ways away, but it of course could put pressure on Moscow, be costly for the country. Also, the EU wants to drastically restrict visa for Russian citizens. That's another step that comes very late. Some member countries, especially Italy, France, Spain and Greece, they've still admitted lots of Russians. There could be a crackdown now. And then Brussels is also looking into the legality of using frozen Russian assets to directly help Ukraine, like using money technically owned by Russian oligarchs to send to Kiev to pay for weapons and ammunition and such.
Yeah, I guess, we're still keeping our eyes on that war there, and hopefully we get an end, conclusive end to it. Thank you so much, Lance Halter, for giving us the details of what's playing out in Europe.
Thank you, Ladi.
All right, let's get a check on the crypto market now. It's a bloodbath. We're seeing right there, the crypto market took a sharp tumble overnight after more than $1.7 billion in positions were liquidated, hitting long holders of Bitcoin and Ethereum the hardest. The sell-off comes amid rising concerns that recent market strength may have been overextended. As volatility spikes, traders are keeping close watch on support levels and macro data that could dictate the next swing. So there you have it. That's a color right there with Ethereum losing that 4,500 level. Let's look at some of the headlines now. The European Union, they're taking a decisive step forward towards monetary innovation. The finance ministers have approved a roadmap for launching a digital euro led by European Central Bank. The plan seeks to boost Europe's financial sovereignty and reduce its dependence on US-based payment giants like Visa, MasterCard, although full implementation, according to the ministers, they agree on that. And they were talking about the 1.7 billion liquidation. So that's the call of most of the markets that we track right now. We'll give you an update tomorrow again on where to stash money. Thanks for watching. I'm Ladi Williams. Bye for now.